Hey, welcome everybody. This is the Options Moneymaker Q&A session. Today is Wednesday, November 4th, 2020. I'm Mark Dannenberg, and with me later on this evening, when we get to Q&A, will be Aaron Rumley and Michael Kastner. So before we get started, we've got a lot of newer folks in our community, and I just want to make sure we're all clear on what the purpose of this Q&A session is. Myself and my team, we represent Options Moneymaker, and we also in this Q&A represent New Cycle Trading and Analytics, the creators of our adaptive entry system software that we use in our live trading room. And we recognize that when traders are either just beginning their journey to learning how to trade options, how to trade futures, that they have questions. And there's not always a great opportunity to ask the question. Might be scratching your head, wish you could clarify things. Well, we make ourselves available every other week to address those specific questions. So this is all about you. This time is for you. We're here to respond to your questions. We firmly support the concept of learn to trade and then trade to earn. We want you to invest some time up front in really learning how to trade. This is not an endeavor where you just jump in and hold your breath and hope it's all going to work out. We're here to guide you. We're here to teach you. We're here to provide tools that we believe will help you be successful. And we support the concept of each of you viewing your trading as your own personal small business. So we're here to help you learn to trade and then transition into trading to earn. Some of the topics that we talk about during these Q&As are the adaptive entry system by New Cycle Trading. That is what we use to identify our trends. We trade it all day long in our live trading room, trading futures. We also use it first thing in the morning at market open to identify through a watch list of stocks and indexes we have some possible opportunities for options trades. The profit sweet spot matrix is something that we talk about also. We've got historical information back to January of 2019, now tracking the performance of those options trades that we take first thing in the morning. The live trading room, if you have questions about the live trading room, we're happy to address those. It really is designed for real-time trading and support. People who are in our live trading room are following along with guidance we provide throughout the market day, 8:45 a.m. Eastern to generally 3:30 to 4, somewhere around in there Eastern time. And we're there to not only just trade and help identify signals, but it's a real-time teaching environment for us, support environment. People can ask questions and clarify their understanding of a particular signal, particular trade that maybe we just took. Why did we close out of that trade? How do we recognize when the trend is over, et cetera, et cetera. Profit Builder Plus is our program, very comprehensive program that was created for options education. So for those folks who are really interested in immersing themselves in options trading, that is an ideal program for you. So if you have questions about that, we're happy to address that. We do offer a futures trading education course for teaching the risk and reward of futures. Futures are often perceived as being highly volatile, highly risky, but when you adopt a set of rules and you stick to those rules and you use a tool such as the adaptive entry system software, you can be extremely successful with futures trading. And in fact, here in just a moment, I'm going to update our performance results from today. And more importantly, we're going to take a look at where our run rates, our average daily performance is projecting us to be over the course of a 12-month period. And then if you have questions about anything related to New Cycle Trading, we're happy to address those also. So one of the most important things that we feel a trader should do is when they've completed their trading at the end of each day, update their personal trading plan. The personal trading plan is a tool that we created to help you forecast what your income could possibly be through 12 months of trading. It's also a tool that helps set some goals for each day. You know what your run rate is, and you know that that run rate is driving your projected income for 12 months. And so it gives you a guideline as to what your goal for each day should be. What's your point production, profit production for each day? And if you hit that number, you can decide to continue to trade, or you can say to yourself, I've hit the number that I know will reach the goal that I have for a 12-month income. I'm going to stop trading. Now, there's nothing wrong with continuing to trade. There's nothing wrong with stopping trading. If you continue to trade, every trade you put out there, of course, puts risk out there. If you stop trading because your result at that point in time during the day matches up to what you'll be happy with over the course of 12 months, then that's something that you can decide to do. Remember, we view each of you as independent business owners of your personal trading business. So each of you makes the decision that is best, most right for you. So today at the end of the market day, we did not update our personal trading plan. So we're going to just take a few moments and do that right here. Now there are two categories that we primarily focus on. We have two different personal trading plans that are in process right now. And the reason we have two is because we wanted to show, when we started talking about the personal trading plan and started focusing people's attention to it, we wanted to show two different ways that you could accomplish your goal. So one is maybe trading from 9:30 to noon. It's a limited amount of trading time. It's not trading the entire day. And that is based on taking all of the adaptive entry system signals. There are 4 signals within the adaptive entry system. So that's taking all 4 of those signals as they present themselves, trading from 9:30 to noon. And then we also track what it would be like if you traded from 7 to 4. So basically 2.5 hours before the regular market session opens, trading until market close. Generally, we're stopping somewhere about 30 minutes before the regular market session closes, but then only taking the trend and the trend continuation signals. So that's 2 of the 4 signals that present themselves from the adaptive entry system. So we're going to take a look at the individual performance today, and then we're going to code that into our personal trading plan. So today we took 10 points of profit, 9:30 to noon, and we did 10 trades. Now each point of profit is, this is all based on the NASDAQ 100 futures, so each point of profit is worth $20. So each 1 point of profit is worth $20 per contract that we're trading. So today we took 10 points of profit and we did 10 trades, and today in the 7 to 4 category, we lost 25 points, and that's going to be at $20 a point also. So 10 and 10 and 25 and then 18, that's the number of trades that we did today. I can see right now that our win-loss ratio was a little bit lower than the norm. You can scan back up here and you can see that our win-loss ratio is usually in the mid-70s and higher. But today was a little bit more challenging, especially early in the morning. The overnight election results, people are still speculating as to what's going on with the election, who the winning candidate is, so there was some speculation in the market. The exchanges were anticipating speculation in the markets. We normally have a margin requirement per contract of $500 when we're trading the NASDAQ 100 futures. So it's generally a $500 margin per contract. Overnight is generally $1,000 per contract. Last night they raised it to $10,000. That by itself is an indication that it is anticipating volatility, anticipating possibly wild moves, and I believe it's now $10,000 overnight tonight also. So that's an unusual move, but it's indicative of what the exchanges are anticipating. So you know, I'm just going to kind of anticipate maybe some reactions, especially from folks who might be newer. If you look at this and go, wow, you lost 25 points today, you know, how does this system work? If I lose 25 today, I lost 52 yesterday. Okay, well, the more important part is looking at the personal trading plan. That really is the most important thing, because we're going to code in our performance for today, and then we're going to take a look at these 4 numbers up here, and I'm going to explain those to you. All right, so we're on the 9:30 to noon, taking all the signals. I'm going to go over here where we enter our performance. Now we had 10 points of profit, so 10, and that's $20 per point. Our personal trading plan has scaled us up to 3 contracts, so we have $600 of profit. And we did 10 trades, 3 contracts per trade, so there were 30 contracts. Now let me go ahead and put in the other information also in the 7 to 4 category, and then we'll talk about the 12-month projection of both categories. So today we were down 25 points, and that's $20 a point, so we're down $500, and we're scaled up to 3 contracts, so we had a $1,500 loss today. And we did 18 trades, and 18 trades at 3 contracts per trade is 54 contracts. All right, so I'm going to jump back to the 9:30 to noon category first. I'm going to start here. There's 4 numbers up here on our personal trading plan. This one is telling us that of the 52-week plan, which is forecasting our income, we have 17.6 weeks behind us. So we've already entered daily information for the first 17.6 weeks of a 52-week plan. Of that 17.6 weeks, there have been 29 losing days. 29 losing days. Now, this is where a lot of people will pause and go, "Oh my God, that's this, that's that, that's horrible." They'll start to make an assessment. And what I caution you about is, it's more important that you focus on the run rate averages. Don't get hung up on an individual data point. Don't get hung up on a big winning day. Don't get hung up on a losing day. I want you to get focused on what your run rate averages are, because regardless of what your average is, if it's producing a positive result and you can continue to perform at that level for the remaining balance of the 52-week period, you have a high probability of achieving the income that's being forecasted here, and it will be an income most likely that you'd be quite delighted with. So we've got 29 losing days out of 17.6 weeks. The average winning day is 23.11 points, and the average losing day is 36 points. Those averages are calculated in such a manner that they factor in the frequency rate of losing days to the number of weeks that we've already recorded. So taking that into account, these are our run rates. So what I want to do is forecast for the balance of the 52 weeks. We already have 17.6 weeks behind us. I'm going to forecast the balance of the 12-month period at those same run rates. So 23.11 for my winning days and minus 36 for my losing days. Now these numbers change a little bit each day, and that's why I think it's important that you record at the end of each day what your actual performance is, so that you know what your run rates are, and then those run rates are forecasted forward to give you the most accurate forecast of what your income could be over a 12-month period. When we started focusing on this, we started with a $5,000 balance. We made an assumption that we would never trade contracts, or let me say it this way. We will always trade a number of contracts where the margin requirement on those contracts is less than 10% of the balance of the account. The margin requirement on the contracts that we trade will always be less than 10% of the balance of the account. That's a limiting exposure to risk, and it helps us remain fairly conservative. Second thing, we can decide in our trading plan what the maximum number of contracts we want to trade is. We've chosen here at Options Moneymaker for this demonstration, we've chosen 3 contracts to be the max, but we can set it at whatever we want. Heck, if I put 50 contracts in there, which I don't think would be practical, but if I put 50 on there, The trading plan will not scale up to 50 contracts until there's sufficient funds in the account so that the margin requirement on 50 contracts would be less than 10% of the balance of the account. So we've limited it to 3. So based on the current run rate, 23.11 and minus 36, forecasting those same values going forward, and limiting our exposure of contract scale to no more than 3 contracts, starting with $5,000, the income projection for a 12-month period is $169,291. I think that's pretty reasonable, having started with $5,000, and you'll have to make the decision for yourself if that is meeting the goals of your personal goals for your personal trading plan. Now let's take a look at the other category. We've already plugged in our data, and right here in the contract override field, I always lock the number of contracts that we traded that day. So if I decide to change the number of contracts just to do a what if scenario and see what would it look like if I changed my contracts going forward, it won't go back and change the value of the contracts that we've already recorded. Okay, so here, 17.6 weeks. We started at the same time as the other category. We have 21 losing days in 17.6 weeks. That relationship of losing days to number of weeks is factored into our average of our winning days and our average of our losing days. So 34.91 is our average winning day, slightly less than what we had recorded before. And like I said, these numbers, these values will change slightly on a daily basis, and that's okay. That's why you should stay on top of it and enter your data on a daily basis. The negative value for our losing days, 28.05, so we're going to put in minus 28.05. And so now this is our run rate. We've achieved this level of performance right here. Now you can assess it and decide whether or not it's meeting your expectations, whether you hope to improve it, whether it's exceeding your expectation, whatever you decide to put on that performance as your own personal label. It is the reality of what you have done. And if you can continue to perform at that same level for the balance of 52 weeks, then limiting your maximum contracts to no more than 3, you have a potential of a $341,280 income. $341,000 having started with $5,000. Now I know that this value was about 20,000, 25,000 higher than that a few days ago. Okay, that's just the nature of the math. We've had 3 losing days in a row. But you go back here and you look at all the series of big winning days that we had in a row. One small loss, other, the winning days. Don't get hung up, like I said, on a single day or even a series of days. It can be a little discouraging, but use your personal trading plan to go back and look at what your forecast is. And if for $341,000 as an income forecast does not meet your expectations, having started with $5,000, increase your contracts if you choose to. That's your variable. I could say, listen, I already know that the number of contracts I'm trading and the margin requirement will be no more than 10% of the balance on my account, which I personally think is conservative. So I'm willing to increase my number of contracts going forward by 1 contract or 2 or whatever you decide. And all of a sudden we went from 341 as my income projection to 418 or 495, whatever you decide as your own personal goal. This is your personal trading business. So I'm going to leave ours at 3. I think it's a great example to demonstrate on a daily basis of what can be accomplished over a 12-month period. And again, these variables right here are going to continue to change. Sometimes they're going to increase a little bit more favorably. Sometimes they're going to decrease a little bit, have a little bit less favorable result. But the most important part is that on a daily basis, You are forecasting out in the future based on what your actual run rate is. And so you have a reasonable idea of what your income could potentially be. Okay, so we're going to shift our attention to Q&A right now. Hold on, let me go back here. I'm actually going to put this on a chart while we're talking. There we go. All right, and so we're open for questions, anything that you may have that you want to ask or comment about.
David's asking, I hope to start trading by the end of the week or sometime next week. Are you still recommending a $1,300 daily max loss setting with Infinity?
So I don't recall that I've ever stated a recommended daily max loss. I think it really has to depend on your personal account, David. It has to depend on what your starting account balance is, how much are you willing to expose yourself on any given day. But I also have a very strong opinion about the max daily loss, which is the daily limit that Infinity has. I don't think that should be used to control your trading, to stop your trading. It's really a fail-safe, and I think that you should understand for your own personal trading business, what are you willing to risk on any given day? So if you were to look at a personal trading plan, and if you used ours as a guide, for example, if you're just starting out, our experience rate trading the trend bias and continuation is 28 points a day. Well, 28 points, if you lose 28 points, that's about $560. Does that meet your expectations? Are you willing to do that? In the other category, it's about 36 points a day, which is about $720. So I think that the risk value within Infinity's system is more of a fail-safe, and stops and that risk limitation really should be used to prevent exposure to unwanted results, unwanted losses. But more importantly, you stay focused on the signals, and if you have a series of signals that give you some losses, then you just have to make a decision whether or not you want to stop. I don't want the Infinity daily limit to be my stop. I want to decide when I'm going to stop, and I want it to be based on my performance run rate. If you don't have a performance run rate yet, then depending on what you are planning on trading, how many hours you're planning on trading, we could help you understand what some reasonable expectations during that time frame would be.
Paul is asking, have there been other periods of time when there were 4 out of 5 bad days, so 3 of them greater than a 25-point loss?
Well, I don't know the answer to that specifically, but
just scrolling through, I didn't really see any on that.
Yeah, I'm just looking. I mean, at all the winning days, let me just see here real quick. We had 2 back-to-back losing days there, followed by a big 125-point day. Here we had 1, 2, 3, 4, 5, well, 3 out of 5 days were losing days here. 2 here. I don't know the answer specifically. Having just scanned through, it doesn't look like it. But it's not really a data point that I find to be valuable. I'm more interested in the big picture averages, and if I have 4 losing days, by the way, this was only 8 points, so that's kind of a nit to me, but if I had 4 losing days out of 5 days, and I want to get obsessed with that result, That's, to me, in my opinion, only a problem if you happen to just start trading right then, and you had,
Especially if you look at that, the week, 2 weeks prior, you had 61, 95, 80, 72.
yeah, yeah, we have long stretches of no losing days, and like I said, I think this ends up only being an issue if you happen to maybe just start trading or just start live trading during this period. If you happen to start live trading back here, let's see, let's go all the way back here to the 5th of October. You have from the 5th of October through, call it the 28th of October, and during that period of time, you have 2 losing days. The total point value of those 2 losing days was 5.25 points. So if you were trading back here, this set of days is kind of a nit, not really a big deal. If you just started here, you might have some concerns, you might have a little heartburn, but I think you just stay the course and you work the averages.
Robert's asking, when you figure the average losing day, do you calculate for the average loss per week before plugging in the number into the trading plan? So on the trading plan, if you want to pull it up, Mark, the numbers that are in the top part there, those are not the straight averages of the profitable days and straight averages of the losing days. It's actually weighted based on how many losing days we're averaging a week. So yes, it's been, I think that's what you're asking. So it's been weighted before we plug it into the spreadsheet for the future projection.
And Aaron's had some requests by some folks to change the expectation of, when you first start using the trading plan, there's a assumption of 1 losing day every 5 days. So we've had some requests to change that to maybe 2 days or 3 days or whatever. That makes no sense to me at all, because what we've done is we've come up with a calculation that factors in the number of losing days per number of weeks we've had as a variable. So right now we have 21 days, losing days out of 17.6 weeks. Hey, possibly we'll continue at that rate, but maybe 2 months from now, that variable will be right in line with the number of weeks. And so we want it to reflect what is actually going on rather than have it be a fixed value of losses per week. When you're first starting out, it makes sense to have a fixed value assumption of 1 day per week because we want to allocate a reasonable assumption of losses. But it's a variable that takes into account the relationship between number of losing days and the number of weeks behind us.
Ed's asking, it's been a while since I've been able to attend this weekly review. Has your workspace changed? It seems like fewer indicators are present and price action shows better.
I assume you're talking about the charts, Ed. If you're talking about the charts, when you say workspace, we're using the adaptive entry system, which was created by New Cycle Trading and Analytics. And it consists of 4 primary signals. They're presented very cleanly, very simply. Do it this way. You have these vertical shaded bars on the chart. Red shaded bars mean you're going short. So if you're trading options, let me go to NQ. If you're trading options on a red shaded bar, you're going to buy to open a put. And then if you're trading futures on a red shaded bar, you're going to go short. And then there are green shaded bars. If you're trading options, you're going to buy to open a call. If you're trading futures, you're going to go long. So the red and the green, very, very simple. Very, very simple. We worked with New Cycle Trading to create a a simple visual for traders. And behind the scenes, these signals are interpreting a variety of other indicators that are being paired together and weighted against each other through all of our research. But we created a very, very simple visual. So now it's the red and the green. That's what you're looking for. Then these labels, there's a T here, there's a C here, there's an M here. Do I have a T plus somewhere? I got a T plus somewhere. These are signals that are saying there's a trend bias signal. There's a momentum signal. There is a consensus signal. And they're just different forms of long and short entries. If you are trading all of the signals, you don't really care whether it's a momentum, a consensus, trend, or continuation. If you're only trading trend and continuation signals, then you would only be taking the T and the T plus. And for some reason, my T plus is not showing here. Okay, well, is it on the, oh, here we go. I'll show it to you on a stock chart because we trade futures throughout the day, but these signals work just as effectively on stocks also. So here's an Amazon chart. What I was showing you in NASDAQ futures on a 5-minute chart. Now this is Amazon 60-minute chart. So here's, I've got Amazon set up where I'm not looking at momentum signals. I'm not looking at consensus signals. I'm only looking at the trend and the trend continuation. So trend continuation signals is a T plus. So there are, again, the vertical shaded lines that are red to go short or buy a put, and the vertical shaded lines that are green to go long. So you can trade these using a stock chart. You can trade them using an ETF, using an index. S&P 500 has been great to trade these, and you can trade them using futures charts. Oh, I think I know what you mean, Ed. So there used to be indicators that were trend indicators, and they looked similar to the Cycle Finder Plus. Yes, we had a couple of them layered in there, and what we did was, as New Cycle Trading continued to evolve the adaptive entry system and the whole collection of signals that we had, we were able to consolidate some of those signals into the simplicity of a single signal indicator. So yeah, that's why it probably looks different to you.
Peter's asking, are you using the 2020 options plan portion of the template to track any options at this time? If so, could you show us capabilities?
Yeah, I'm not using that currently, Peter. But you're talking about in the in here. If we are trading options, you'd be coding your performance similar to coding it in the futures tab. You'd be tracking it over here, but I'm not currently doing that. We've not been displaying that for our community because we're not consistently trading options. We're sporadically trading some options. We were trading options at the beginning of the year, and we're primarily trading futures at this point. If you have the personal trading plan, though, all the instructions that you need to use the options tab are embedded in the trading plan. Just waiting to see if we have any more questions here. I've been looking at 60-minute and 30-minute charts on the indexes, on the cash indexes, and tracking some of the performance, particularly, as I mentioned, of the trend signals and the trend continuation signals. And it's been interesting to me to see how effective these signals are across multiple stocks. So I've been taking a look at our watch list. Let's go back to Amazon here for a minute. You know, here's a trend bias signal just randomly. Came on at 9:30 in the morning on the 30th of October. The next bar is the signal. It's the second red bar in a sequence, and that signal's right there. Right there is telling me to buy it, to open a put, and technically the end of the cycle is right here on the white bar. Let me get that up there, right here, and when that white bar opens. And so that's a pretty healthy move down that just simply came off of that trend bias signal. You can close it at any time and take a profit, whatever satisfies you, or if you're still holding when that white bar opens, you would take it off. Here, your next signal is this trend bias signal to go long, get a little sideways movement, sideways, maybe a little bit of drawdown on it, and then boom, you had a nice, nice move to the upside. Has not yet shown a white bar that would say you should close out, but you know, you got to be wise about what your goal is and have reasonable expectations. But I can go through stock after stock after stock. I primarily like the 30-minute and the 1 hour charts on the stocks. I will at times look at 10 minutes, but that's more for an SPX or NDX trade, maybe RUT. One thing that I will consider, I don't do a lot of this, but when I'm trading futures and we're in a really choppy period, and I can just see that the size of the bars are pretty wild, but the overall direction seems reasonable in terms of the signal, or Michael has a very strong bias towards a particular target, upper or lower target, all sorts of factors. I can back out, and instead of taking the signal as a futures trade, I can take it as a options trade and maybe just go out a couple of days, so I don't have that immediacy of the need to resolve the trade that day or in the next hour. Or if the trade moves against me initially, instead of being stopped out immediately on the futures trade, I can hold because I've got a little bit of time available, and as long as the signal still points to my initial directional bias, then I can hold the options trade. So it's just another way. It adds a little complexity to your trading, and that might not be what everybody wants, but it's just another way to think about making your trading as effective as possible, and making use of the adaptive entry system, and trading stocks, indexes, or options.
Fred's asking, this is my first time on your site. How do you suggest I get started?
So Fred, we offer tools that will help you basically build your personal trading plan business. If I was just getting started today, I would start by learning about futures. That's where I would start. So there's a futures trading education course. I would then make sure that I had access to the adaptive entry system signals, which is a subscription, monthly subscription through New Cycle Trading. And then I would make sure that I had the personal trading plan, which is what I showed here. And then I would make sure that I had a live trading room subscription, because Michael and Aaron are great throughout the day at providing a lot of reinforcement in understanding of how to interpret the signals and really how to be a successful trader. So those are the four primary things that I would take a look at. And if you're interested in just learning a little bit more, you can go to, maybe Aaron, you could post the link for Fred, but optionsmoneymaker.com/investor. And that will give you those access to those tools to learn more about them and how to enroll in those. But those are the four tools that I think everybody should have if they're starting out. And then you give yourself, I'd say, 3 months of learning and trading in simulation mode, and really practicing your skills and listening to the education and guidance that Michael and Aaron provide most every day. And I think that you will find that you can enjoy some very healthy success from your trading.
See, Virgo's asking, how has the daily Cycle Finder Plus indicator been working on your pre-open option plays?
Yeah, so that varies, by day and by stock and index. We've got a watch list of stocks and indexes. Let's see, how many is it? 1, 2, 3, 4, 5, 6, 7, 8.
It's also going to depend on the personal win rate that you choose for while using the profit sweet spot matrix.
Yes. So the success rate, you're going to have periods of time where there's greater runs of success, much like we've seen with our futures trading, and you have other periods of time where you are taking some losses. But overall, our data back to January of 2019 still shows that it's a very positive overall result. And like Aaron said, there are so many variables in there. It's what do you choose for your personal win-loss ratio? How long are you holding? How quickly are you entering into the trades? If Aaron's calling out 4 different trades on 4 different symbols, are you taking all 4 of them, or did you choose to take 1 or 2 of them? We record and track all of them so that we have a good view of how each is performing. And we periodically do a review to see how they're performing. We're actually getting ready to do that review. And there may come a time, we haven't done this yet, but there may come a time where we decide to set aside one of the stocks in our watch list and perhaps add something else to it. But overall, it's a good process.
So Robert's asking, on the personal trading plan, does the average daily profit and average loss automatically get entered, or is it manually entered? So if you're talking about what's being used to forecast out, you're manually entering those. The part that's taking into account our averages in I think it cells E2 and E3 of the trading plan. Those are something that I've added for Mark specifically, just to keep up. So from D2 to E3, those are things that I've added for Mark specifically. We're looking to release those with our next update to the trading plan as well, to everyone else. But those are calculated automatically. And then as we go and enter the performance each day, it's going to change those numbers. And then we manually enter them into the E5 and E6 cells, which help project out the forecast.
As a follow-up, Fred is asking, I currently trade with Schwab. Do you have a preferred broker? So Fred, if you're trading, are you trading options or futures with Schwab? We trade futures at Infinity Futures, and we generally trade options at E-Trade. Most of our focus and attention during the live trading room session each day is on futures. That's after Aaron does a pre-market review of our watch list of stocks and focused on that watch list of stocks for options. So Fred, are you interested in learning how to trade futures, or are you interested in only trading options? Because what I laid out for you in terms of tools that I think would be necessary for you to get started is based on trading futures. If you prefer to trade options, then you don't need the futures trading education, but you do need to still understand how to use the adaptive entry system signals. And we can be very helpful to you in the live trading room in understanding that. The method of using the signals is the same if you're trading futures or options. We're focused on identifying those signals and explaining the signals on a futures chart, which is the NASDAQ 100 futures, but then you can translate that into options. So for example, here's the NASDAQ 100 5-minute chart. This is what we trade off of all day long. But I may choose to take a trade, as I was pointing out before, on Booking, which is one of our watch list stocks, and trading the trend bias and the trend continuation signals. I mean, it's just so easy to go back and see where those signals presented themselves. And this isn't just hindsight trading. This is going back and recognizing the value of those signals. So if I go all the way back here, there's a little bit of a choppy period in here where you can see we had 2 red bars, 2 white, blue, white, blue. All right, so that's a little bit of a choppy period in there. But then you get into this run of short trend, then you get into this run of a long trend that ran quite a while here. Actually, this long trend ran from 9:40 a.m. on November 3rd. This is a 10-minute chart, by the way, November 3rd. And it looks like it ended at 1:40 today. So that was a nice run to the upside. And then here's a short trend that started at 2:40 today and is still in play. So once you learn how the signals are interpreted, you can use them whether you're trading futures, stocks, or options.
Fred, if you wanted to trade futures, I sent you back who our contact is at Infinity. I've got Schwab. I trade Schwab, but I don't trade Schwab. I don't trade options with Schwab. The requirements are too high. But you can call Glenn at Infinity. I sent it to you in the message.
You mean you don't trade futures at Schwab?
Yes, whatever I said. Yeah. Yes.
Have we had any trades tonight? Nice trend bias signal to the upside to go long. Now there's $10,000 margins tonight, but that moved from 11,812 and a quarter up to a high of 11,836 and a half. It's a nice move right there off of a simple trend bias signal to go long.
M. Dean's asking, is there a pattern as to when we, during the day, do drawdowns happen? So last hour of the day or opening of hour, or are they random at all?
Yeah, there's no pattern that I've identified as to when drawdowns occur. You're going to have drawdowns pretty much any time during the day.
On almost every single trade. It's kind of rare that you'll have a 0 on the drawdown. Not so rare that it doesn't happen, because it does happen. But when you have a 0 drawdown, it's more likely to happen on a fractal trade. That's nothing scientific, just based on observation. But most of them are going to have some sort of drawdown, even if it's just a few ticks.
Yeah, and we keep track of the drawdown. We haven't yet tabulated the drawdown and done an average analysis on it, but we have the data in here, and thanks to Aaron's creation of this tracking tool, we will eventually do that. But you can see, I mean, the drawdowns range. Here's today. Let's just go back to 7 this morning. You know, first trade after 7 o'clock was a drawdown of 20 points. Then the next trade is only half of a point. Then you have 0, you know, you have 2, you have 20. Earlier today, there were a few 20-point drawdowns, but you know, it's not unusual to have some sort of a drawdown. It is unusual to have 0, but it can happen. But we pay attention to the drawdowns, and eventually we're going to be able to sort and kind of determine, well, what's the average drawdown, what's the average drawdown per method, and see whether or not there's a pattern in there for us to identify and share with all of you. Now, Fred's asking, where are you located? So our team here at Options Moneymaker and New Cycle Trading, we're scattered all over the United States. We're a virtual organization, and you know, we're located in Georgia, Colorado, Arizona, Michigan, California. All right, folks, I don't see any other thoughts or questions out there. I'll give it here just a couple more minutes. I don't want to rush you, but if you have any other thoughts or questions, let me know. Michael, Aaron, if you had any insights or thoughts you wanted to share. Those of you who might not be familiar with the adaptive entry system, here's the signal right here. In fact, did that come on? Yeah, it didn't come on at the right time, but it's identifying a short momentum signal. And so the highlighted shaded momentum, highlighted shaded red bar would tell you to go short. Now, one of the things that we pay attention to, though, is when does the signal come on? So we have an alerts log here that tells us exactly what time the signal came on. And we can see that this came on the 1950 bar. That's the bar that opened at 1950. But the signal didn't come on, as we see right here, until 1951 and 12 seconds. And we only take trades that come on within 3 seconds of the open of the bar. So here was one back here, this momentum short at 1940, and it didn't end up printing. See, that's interesting. This is the kind of stuff that you learn in the live trading room and from the training that we provide for the adaptive entry system. There was a momentum signal that came on short at 1940, but then it went away. And so we teach you how to react to those situations where a signal comes on, you take the signal maybe to go short, and then the signal goes away. We teach you exactly how to address that. It's a pretty sophisticated, intelligent system, but it has been built in such a way that it is very simple, ultra simple to visually spot your trades, and with the help of the alerts log, be able to know whether or not it's a valid trade that you should be jumping into. Fred, first of all, Aaron, were you able to send Fred the link?
To the investors, yes.
Yes. In the link that Aaron sent you, there is a link to be able to join the live trading room.
While I'm thinking about it, March Fed Day, so tomorrow at 2 o'clock, it's 100% chance they're not going to do anything. That's just by the by the probability. So target probabilities for no tomorrow, 100%. They won't move it, but you never know.
So
But they
Michael,
could-
what happens on Fed Day?
Well, at 2 o'clock, the Fed will announce what they're going to do, and then you'll see some. Most of the time, at least like today, it's just really backsaw, whipsaw back and forth. But I don't know if tomorrow will be that way or not. You just never know.
Well,
So-
so often what we see is when it's Fed Day, which the news always comes out around 2 o'clock Eastern, we can see some pretty lackluster movement if there's anticipated news. Michael tracks a service that kind of estimates whether or not there's going to be any kind of reasonable expectation of news. And then what we frequently see, which is kind of amusing to us, is news, comments after the news, and huge movement up or down, and then right back to where it was previous. That can happen. And so anyway, we pay attention to when it's coming up. Although for me personally, I'm just going to stick to following the signals. Hey, Bruce. Bruce is asking, was there any interest in possibly teaching Elliott Wave retracement class? Absolutely, Bruce, but it's just not on our near-term agenda right now. We're working very closely with New Cycle Trading on some other developments, and we're having some conversations about yet some other things we haven't discussed yet or announced. But we have that on our list of possibilities. I know you've asked about it before, and for now, we're just going to, in the live trading room, rely on the knowledge, experience, and expertise that Michael has regarding Elliott Wave and the fib retracement information. All right, well, folks, I think that's it for this Q&A session. I'm going to go ahead and close out. I want to thank all of you for giving us the privilege of being your teachers, your mentors, helping you learn how to trade so that you can trade to earn. It gives all of us a lot of pleasure, especially in the live trading room, when we get messages from our members telling us that they made X number of dollars that day, or they hit their goal early in the day and they're going off to play golf or do something else the rest of the day. We take a lot of pride in hearing that, because we hope that we've been at least some small part in guiding you to the right tools and the right knowledge and the right support for you to be able to do that. And we appreciate you spending some of your day with us. So Michael and Aaron, thank you very much. You guys are awesome in the way you provide that knowledge and expertise every day. And on that note, I'm going to go ahead and close out the room. Thanks, everybody.